Most smart money indicators show you every break of structure on the chart and then leave you completely alone to figure out which ones actually matter. So you end up overtrading, getting stopped out, and wondering if smart money trading even works at all. These indicators only show you half the picture. The Smart Money Structure Indicator by GainzAlgo doesn't just detect structure. It runs every single signal through a 6-layer institutional filter before it ever shows up on your chart. That means no guessing, no noise, no fake breakouts pulling you into bad trades. I've gone through every setting this indicator has, and there are a few specific adjustments that completely transform how it performs. Most traders never find them. By the end of this video, you will. Let's get this on your chart first. Open TradingView and make sure your chart is already loaded. At the top, click on the Indicators tab. In the search bar, type Smart Money Structure. Find the one by GainzAlgo and click it. It will load instantly with the default settings applied. And this is where most people stop. They see the signals, they see the dashboard, and they just start trading. Big mistake. Because those default settings, they're working against you, but we'll get to that in a moment. First, let me show you what you're actually looking at on this chart, because there's a lot more happening here than most people realize. The first things you'll notice are the green buy and red sell signals. These are fully confirmed entries, meaning structure, volume, and trend alignment have all agreed before that signal ever appeared on your chart. Then you've got the change of character labels. These are your early warning signals. They show you the exact moment buyers or sellers are starting to lose control, before the move has fully committed. That's your window to prepare. The purple break of structure zones take it one step further. This is where control has officially shifted, meaning one side has completely overpowered the other, and the market is now moving in their direction. The gray trend line shows a bearish dominant trend and acts as a dynamic resistance line. And tying everything together is the dashboard on the right. Trend strength, confidence level, volume participation, and multi-time frame alignment, all in one place. No more flipping between time frames, trying to piece the picture together yourself. The indicator does that for you. Now here's what makes all of this actually work, and why most people never get the most out of this tool. The default settings on this indicator are not optimized for clean trading, and I say that having tested them extensively. Here's exactly what to change and why. The first setting is pivot length. By default, it's set low, which means the indicator picks up every minor swing on the chart. The result? Change of character and break of structure signals everywhere. It looks active, but it's mostly noise. Increase the pivot length to 15, and the chart cleans up instantly. Only the significant structure points remain, the ones that actually matter. Next is the minimum signal distance, defaulted at 5 bars. At that value, signals cluster almost on top of each other, which is a fast track to overtrading. Push this to 30 and signals become selective, deliberate, and far more meaningful. Finally, scroll down and disable the divergence scanner. It's not that divergence is useless, it's that mixing it into a structure-based system creates conflicting signals. Turn it off and the indicator does exactly what it was built to do. Pure structure, pure confirmation. 3 adjustments. That's all it takes to go from a noisy signal machine to a precision institutional tool. Before we get into the buy and sell setups, a quick word first. Learning an indicator is only half the equation. The other half is trading it with the right broker. Wide spreads, slow execution, or a dodgy regulated broker can kill even the best system. That's why I built BrokerCheck. We review and compare brokers across Forex, CFD, stocks, and crypto, breaking down regulation, spreads, fees, and everything that actually matters. Link is in the description. A 2-minute go through could save you a costly mistake. All right, let's get into the setups. The foundation of every buy trade with this system is the green trend line. As long as price is respecting and staying above it, the market bias is bullish. Selling into that structure means trading directly against institutional support, and that's a losing battle. As price pushes higher, watch for a bullish break of structure. This is your first confirmation. It tells you buyers aren't just defending price, they're willing to push it to new highs. The trend is valid and institutions are still involved. Then comes the gray upper trend line, previous resistance within the trend. When price breaks above it, sellers have officially lost control of that level. That's your second confirmation. Right after that breakout, the buy signal prints. You should enter at the close of breakout candle. Stop loss goes just below the signal or the most recent structure low. Take profit targets a 1 to 1.5 risk to reward. Clean, structured, and completely rule-based. But that's the buy side. The sell setup is where the real precision of this system shows itself. The foundation here is the red bearish trend line. Below it, the market is bearish. Any move back toward that line is a pullback, not a reversal. Don't let it trick you into thinking the trend has flipped. As price pulls back and reacts around that red trend line, watch for a change of character. This is your early signal that buying pressure is fading and sellers are starting to establish control. Then price breaks below the change of character level. That's your confirmation. Buyers tried, they failed. Sellers are back in charge. The sell signal prints immediately after. Stop loss goes just above the recent swing high or above the structure that caused the change of character. If the price goes back there, the setup is invalid and you need to be protected. Again, put take profit at 1-to-1 or 1-to-1.5 risk-reward ratio. 2 setups, both rule-based, both filtered through the same 6-layer institutional logic working silently in the background on every single signal. Now, to get even more accurate signals, we need to combine this indicator with a moving average. It doesn't predict anything on its own, but what it does is give you a clean visual line that separates 2 worlds. Above it, the market is in an uptrend. Below it, the market is in a downtrend. And once you combine that with the smart money structure signals, the rules become incredibly simple. Here's how to add it. Go to the Indicators tab, search for Moving Average, and add it to your chart. Then open its settings, change the length to 100, go to the Style section and increase the thickness slightly so it stays visible. Click OK. Now, the rules are straightforward. Take buy signals only when they appear above the moving average, and ignore any buy signal below it. Take sell signals only when they appear below the moving average, and skip any sell signal above it. That's it, one filter. But the impact is significant, and that's exactly how institutional systems survive. They don't need to be perfect. They just need to be consistent. If this breakdown helped you see the market differently, smash that like button and subscribe. Hit the bell icon so you never miss an upload. And if you want to go deeper, click the video on the left to find out why the US dollar is dying and how America's wars are accelerating its demise. Or click the video on the right to discover the turtle trading strategy, one of the most legendary trading systems ever created. See you in the next one.